Hello, I'm Mark Apsey, Head of Indexing here at Thematica, and following up on Chris's inaugural Monday video. Now, those of you who know us know that we pay attention to macro and micro signals for not only broad markets, but also for a number of what we like to call targeted strategies. With that in mind, let's do a quick recap of what happened last week and what we're seeing in the week ahead. Now, last week seemed worse than it actually was from a broad market perspective, as ultimately the S&P only fell about 3%. Now, by comparison, our cloud computing and AI models declined twice that, and our CHIPS Act model came close to almost tripling the broad market return. Now, unsurprisingly, our market hedge model did its job, rising just over 3%. Now, there were specific risks like supermicrocomputers' earnings and outlook, which sparked a brief run on a number of names in the technology-focused models mentioned earlier. But overall, the focus was on macro signals, like gold hitting record prices, 10-year Treasury yields surpassing last November's highs, and volatility spiking, sending the VIX to just over 21 on the open on Friday before it settled to close at just under 19. Now, also on traders' minds is the Fed's ongoing battle with inflation. Atlanta Fed President Ralph Bostic rattled some cages on Thursday, effectively stating that while many are focusing on the longer part of higher for longer, he doesn't seem to have any issues turning his attention to the higher part of it if it looks like progress isn't moving quickly enough. Still, he did mention that economic risks are, quote, broadly balanced, unquote. Now, while his comments spooked equities, Fed funds futures curve has yet to price in any hikes. Clearly, a switch was flipped coming into the second quarter, as all of our 23 models are seeing negative price returns quarter to date. Well, all except for our market hedge model, which, as mentioned earlier, is doing its job. Now, this week sees a lot of bellwether names reporting, starting with Verizon, which will give us a peek into digital infrastructure spending, as will comments from AT&T, T-Mobile, and Juniper Networks later in the week. Energy updates are expected from Enphase, as well as Halliburton, ExxonMobil, and Chevron. Now, given the ongoing fighting in both Ukraine and Israel, and the continued funding provided by Congress, we'll also see what, if any, impact there has been on results from Raytheon and Lockheed Martin. Now, consumers will be front and center this week. Automakers GM, Ford, and Tesla will be reporting, as will reseller AutoNation. PepsiCo, Chipotle, Colgate-Palmolive, and Mattel will also report. Now, while these games will give us insight into consumer spending, we'll be paying particular attention to any comments Visa has, especially with regards to delinquent accounts. Now, big tech in the form of Meta, IBM, Microsoft, and Intel will help round out the AI picture, and Lam Research and KLA Corporation will give us some color on semi-equipment spending. On the macro front, economic health in the form of April PMI figures will be delivered on Tuesday, and expectations are for those numbers to continue to strengthen, which is generally a good thing, supporting a possible no landing scenario. But of course, in the mystic art of Fed tea leaf reading, any significant upside could spook markets given Mr. Bostic's comments. We'll also get more updates on March new home sales, and expectations are for a modest 8,000 unit bump to 67,000. Sorry, 670,000. Little difference there. Again, while this is good for home builders, there are lots of downstream companies that are looking for healthy numbers. Now, consensus for preliminary Q1 GDP is 2.7%, although the Atlanta Fed's GDP Now latest update, as of April 16th anyway, puts that figure at 2.9. Once again, surprises either way are going to mean some market moving days. Now, finally, we'll close out the week with a March inflation update from the Fed's preferred inflation gauge, the PCE deflator, both top line and core. A consensus is predicting a 0.1% rise in top line and the same amount of a decline in core. Now, the devil, as they say, is in the details, and increasingly we found that there's a lot more going on these numbers than anyone can tell just from the single blended average. So we'll be among the many digging through to see what is driving costs. Well, I don't want to take up too much of your time, so that's it for now. Thanks for watching, and we'll see you soon.